So if someone's retired, they have a 401k, you just go get a self-directed 401k and start buying Bitcoin. It's not a big deal.
Yeah.
You self-direct. But if you're still contributing and you want to get that match, there's just some type of math in their head that 60% CAGR isn't good enough, right? So they need that match, because without that match, they're losing. They're not, but you're just not going to convince somebody of that. They want to get the match because they calculate it into their earnings and salary and stuff like that. And that's what you do. You buy MicroStrategy. There is nobody else to buy. I wouldn't buy the miners. I would buy MicroStrategy, because what's happening
I own
is
some Marathon as well, and a couple other, but mostly MicroStrategy.
Yeah, I not that long ago, I was doing podcast rounds, and I told people, look, after the halving, earnings are going to come out. When earnings come out and people realize that it's not as profitable as they said it was, the mining prices are going to go down. And when they do, you buy long call options. You buy as many as you possibly can. And I literally told people that, and now they're sitting on 500% on those options. And depending on what expiration you did, some of them are sitting at like 100x because they were trading for pennies on the dollar.
Wow.
And it was before any of this price action. So now with that implied volatility to the upside, the premiums on the call options are going crazy. And the same thing happened in 2020. I did the same thing in 2020. So it's cyclical and you can replay it. But with MicroStrategy, it's not going to be cyclical because it's based on Bitcoin yield. That's
what's my understanding was that my shit, like the reason I haven't even considered selling or doing even listening to all of the noise is just like my share, every share I have, even if they're printing more shares, whatever, every one of my shares is going to just continue to be worth more Bitcoin.
Yeah.
So to me, that's like
accumulation engine.
Yeah.
It's a Bitcoin accumulation engine. And then what they're doing with their convertible notes is extremely interesting. It's basically a different version of a Bitcoin bond.
So Mark, maybe you have more insight on this. My guest the other day was talking about this, and his thought was that this was actually like a systemic sell pressure with the bonds, because once MicroStrategy hits that strike price, the people who own those bonds can convert it into stock, and then they're going to sell their stock. Do they have to sell that stock? Can they hold the stock? I mean, what are your thoughts there?
Yeah, I think the reason that they would convert, especially at a 55% premium, is that they're going to liquidate the stock. But the thing is that it works both ways. On the way up, you're building your premium to NAV. I think they're at like 3.2x right now. And then on the way down, you're just going to shrink that premium. So then for the people who continuously, that's the difference, right? Like one of those is a trade, the other is an investment. So the investors are going to win, because the traders will come and go with the ups and downs. But the long-term investor is accruing more Bitcoin per share.
Yeah.
So if you see that premium get squeezed down,
that's the time
you want to buy. Yeah, it's like buying the discount.
So now it's kind of like not the time to buy my MicroStrategy. We're at like 2.3 to 3.
Well, I'm not sure that I would say that either, because when you look at some other companies and what they do, and they're trading at like 10, 20, 50. And you look at MicroStrategy at 3, they're accumulating engineered money. They're accumulating the reserve asset of the internet economy. They're accumulating the most pristine form of collateral in the world.
Yeah.
Now they're transforming it with different financial instruments that allow other companies and entities. These are the same customers, or I shouldn't say same, but these are similar customers of people's reserve. These are entities that either by regulation or by policy are not able to hold Bitcoin. Like take an insurance company, for instance. An insurance company can buy Bitcoin and put it on its balance sheet. The problem is that the rating agencies give you 0 credit for Bitcoin.
Yeah, they're going to lower their...
So they can't write a liability against it. But if they bought a U.S. Treasury...
That's like insane, though. Like that blows my mind how we're not... I mean, it's like the most pristine form of collateral in the world. I just don't understand it.
Well,
they haven't understood that yet.
People like you and me are always a whole cycle ahead, right? Like in 2016, we were telling people Bitcoin's digital gold.
I wrote an article about this. I think it was like a local paper. I don't know, maybe 2 or 3 years ago, 3 or 4 years ago, talking about like Bitcoin as pristine collateral, and talking about like how it could be used for like mortgages and lending, and like, hey, you've got a person with low credit history or reasonable score, like, why not just like do the normal mortgage process, but instead of like denying them, say, hey, post like 10% Bitcoin to this loan. If like you own Bitcoin as an asset, like, post that as an additional component to the loan, right? And that will get you the approval, right? Because then you'll have that collateral you can seize if they fail, right? If they fail on the mortgage or whatever. I just think it could be used to augment so many lending products.
That's exactly what we're doing at People's Reserve.
So talk to me about People's Reserve. Tell me what you guys are working on. And you mentioned this Bitcoin as the reserve asset of the internet economy. Touch a little bit more on that and talk to me about.
So actually, if you could pull up Jeremy Allaire from Circle, the head of Circle, he recently sent out a tweet. I think it's really interesting because he said 2025 is going to be the year that the world connects to the internet financial system. Now, I think he's being a little bit, pull up his Twitter, because he sent it out on Twitter, or X, I should say. Bad habit. I have bad habit of calling X Twitter still.
Yeah, same here.
So just scroll down a little bit because he recently sent it out. And what? Yeah, there it is right there. 2025 will be the year the world fully wakes up and begins actively using the internet financial system. Now, I think he's talking about his USDC as the internet financial system.
Yeah.
There are multiple financial systems, centralized and decentralized, that connect via the internet. At the intersections of those systems, I like to imagine that's the internet economy. And that internet economy is a marketplace for true free market interest rates. That's what's happening here. A new market with free market interest rates based on Bitcoin collateral and over-collateralized lending, not fractional reserve banking, is now not only formed, but incentivizing the traditional market makers to come here. Because what they found out is that socialist, communist, price-controlled interest rates are nowhere near as profitable as free market interest rates.
Yeah. I mean, that's this whole idea of Austrian economics, right? And this whole idea of like interest rates being the price of money in an economy. It's like the ultimate aspect of civilization that should be capitalist, not socialized or communist, right? Is like the free market for money, right? And
so they say free market, but we're not really a free market.
No, it's controlled by a bunch of people in a room. They just make a decision. And
this internet economy, it's an aggregate economy of the world. No one country can dominate it. No one country can outcompete it. No one country can write the rules. So you have this basically wild, wild west of financial contract where you have a free market price discovery on the interest rate on the cost of capital. It's actually based on the supply of money and the demand for loans rather than the stated rate.
Yeah,
that's anchoring that anchors all of these things down, and that is what People's Reserve exists for. We exist as a marketplace to attach the traditional world to the digital economy, to attach and give access to corporations and even people, right, regular customers, access to this domain that they don't have the technical ability to operate in or understand. You know, if you told somebody who just signed up for Coinbase 2 weeks ago, buy some Bitcoin and set up a delta neutral position and provide liquidity on Uniswap and Balancer, and by the way, bridge it over on Arbitrum, and you can rake in around 25% APY. Well, they'd be like, all I heard was 25% APY. But then they start doing all the studying of all of the technical abilities that they need to have, and all of the rule sets they need to understand, and all the protocols they need to interact with in order to generate that 25%. Forget it, it's gone. And that's what People's Reserve is here to do, but in a delta neutral fashion. That's People's.
You take a fee from doing that? So somebody will send you the Bitcoin and you will do that for them? Is that kind of what your goal?
No. We don't want to. No, we don't want to do that at all. So People's Reserve is actually a reserve of money used for the people. So that's where that idea came from. And Bitcoin bonds and self-repaying mortgages are not necessarily leveraging the internet economy, but our vaults do, that people can deposit to the vaults, and you can have like a delta neutral positioning. And this is really interesting. I'm sure your listeners will, especially some of the more sophisticated ones, will check this out. What you can do is you can go to actually, if you go to like CoinGlass funding fee, it's like CoinGlass funding fee, you can actually see the decentralized internet economy rates.
Yeah,
there it is right there. And this is going to show this in 8 hours. So see right there, it says current. Just annualize it to 1 year so people can get an idea. Yeah, right there.
Beautiful. Yeah, go to 1 year. Usually around 10%.
Okay, so let's say you want to go on DYDX, right? There's a good decentralized. You bridge your Bitcoin over there, and click it again so it brings. Green is actually bad. Red is good. I hate that about it. So yeah, so on that AKT right there, which I'd rather have Bitcoin up there. Maybe you can refresh, but what you would see is that right now, yeah, there you go. Now go back to the 1 year to annualize it. There you go, 41.5%. So if you were a delta neutral market maker on DYDX, how you would do this is, let's say you buy $10 million worth of Bitcoin. You keep $5 million in your wallet. You take $5 million, you bridge it over, and then you go short 1x. Well, in that perpetual contract that people are trading on DYDX, they pay a funding rate. And when the rate is like this and it's red, the shorts get paid.